Hey guys, welcome back to the channel. Today we're going to be looking at ticker symbol NYCB. This is New York City Bank. Last week the shares plummeted, I think around 30%, 30 plus percent, down to $6 now. So March of 2023, there were tons of banking concerns. Some of the banks went out of business. I believe New York City Bank actually acquired Signature Bank, which is one that actually went under. So when we're thinking about, or when we're looking at New York City Bank, we'll look at the market cap, sales, income, cash, debt, etc. But also just talk about the risk, because banks are usually generally pretty, I don't want to say tight, but pretty, I guess pretty tight is what I'll use. The assets and liabilities are pretty tight. So if there is some slippage, the assets could get dwarfed by liabilities. And when you have more liabilities than assets, you put your company at risk. So just kind of going out of order of my normal review of a stock, but New York City Bank's assets as of today was it's actually 111.23 billion. Liabilities is 100.237 billion. So they have about an 11% slippage. If something happens that affects that 11% threshold between assets and liabilities, they could be in some serious danger at the customer level. So the bank is obviously insured by the FDIC. So anyone who has funds in the bank would be fine. But the people who would be more susceptible to the risk of losses are the shareholders. If the bank goes out of business, it's usually the customers who are okay, but the shareholders are the ones who are screwed, because you're sitting there holding a $6 stock that could go lower. The Fed could come in and bail them out, but the company would have to, again, go private and have to reconcile their data and their funds. So yeah, I think the big risk here is more towards the shareholders, not the actual customers. There are actually people who are trying to get their money out of the New York Community Bank, and it's frozen. So, and that's as of yesterday, which was Friday, or would have been Friday. Today is actually Sunday that I'm recording. So as of yesterday, or Friday the 2nd, they were frozen. So pretty crazy. But let's take a look and see what the stock could actually be worth on paper. And this, again, this is older FinViz data, unfortunately. But I think the bigger thing that we want to pay attention to here is actually the assets and liability ratio. Again, that slippage on that 11 billion the threshold is very scary, especially for a bank dealing with customer funds. So as of today, which is the 4th of February, the market cap is 4.36 billion. The income is 2.31 billion, and the sales are 8.22 billion. So all of those added up get us to 14.89 billion. And then looking at the cash on hand. So the cash on hand is 6.929 billion, which is 6,929,000,000. So not bad. That brings us to 21.819 billion. 21,819,000,000. They only have 1,562,000,000 in debt, which is not bad. And I also want to note that their cash reserves on hand are a little bit higher historically than what they've had before. And their debt currently of only 1.5 billion is actually lower. I believe they had 15 or 20 billion in debt as of last quarter. So their debt continues to fluctuate. And it's also been lower before, under 5 billion as well, their debt historically. So their debt definitely fluctuates a ton for a big bank. So all that considered, cash minus debt, that brings them to 20,257,000,000. If we take that 20 billion, 257 million, and we divide it by the shares outstanding, which is currently 708,750,000. It brings us to a $28 stock price, which is absurd because the stock is actually trading right now at $6. So the stock should be 28, but the thing that is dragging this stock down, not only fear, but also they just missed their earnings, which again led to the huge crash. So that's not good. But I do also want to take a look at their EPS. Earnings per share is actually beautiful. Looking at the trajectory here, same with their sales, very huge. And then also looking at their shares outstanding. So their shares outstanding from 2021, they used to have 465 million shares outstanding. 2022 was 681 million shares. 2023, 722 million shares outstanding. They are slowly diluting into the stock, which is not good for shareholders because it decreases the value. More shares available to the public, more supply, not as much demand. Again, dilution. So not good for retail shareholders there. Also looking at the chart. The chart is horrendous. It's long term, it's always gone down. It's always down and to the right, and unfortunately it's still continuing its path. I checked the big money. What's the big money doing? You would think if it was a really good discount, big money would be swooping in and buying it up. That's not the case. Actually, a lot of the big money is trimming their positions. There have been some that are taking risks and actually purchasing some stock in New York City Bank. Sorry, I keep calling it New York City, New York Community, NYCB. So we're seeing a little bit of hesitancy for big money. Do you spend, do you buy, or do you sell here? It's hard to tell. They just had a big miss. Liabilities are dangerously close to their assets. If they have one missed payment or a big customer defaults on a commercial loan that they have, it could be horrible. It could really affect that bank. Again, the customer funds should be FDIC insured up to $250,000 or whatever the limit is for New York. But again, shareholders are going to be the ones who are feeling the pain. So New York City Bank, it did well last year during the 2023 banking crisis situation, but this year I am very hesitant on New York City Bank or New York Community Bank. I can't get it straight. I'm going to be open to looking at other banks because there are healthy banks out there. Like there are banks that have a lot less debt, a better ratio of assets to liabilities. Maybe they don't pay a dividend, or maybe they pay less of a dividend. Maybe historically their stock has actually been going up and not down. You know, banks that aren't diluting their their shareholders. So I think that's a takeaway for myself, to just look and see what are the banks. You know, if New York NYCB is not the bank, what is a bank that's worth buying? So I'm going to do my homework. I'll look into it and I'll create another banking video probably about a week from now. But that's my opinion on New York City Community Bank, whichever one you want to call it. If you made it this far, please consider hitting the subscribe, hit the like, and I'll talk to you guys soon.